I had visited with Babu sir year before last. We were chairman, vice chairman together. So we had gone to 2-3 countries in the Middle East, and a very strong Malayali population there. And
Arun sir, now we are on live now.
Okay.
Live started. So, you can start.
ANIKET sir, we can start. Okay. Surya.
Good morning, respected dignitaries, on and off the dais, Chairman of Kozhikode branch CA Arun Subramaniam, Chairman of the Thrissur branch CA Aryan KK, and Chairman of Palakkad branch CA Vinoj Menon, senior members in the profession, my dear friends, and the learned faculty for the day, CA ANIKET TALATI. A warm welcome for you all. I welcome you all for the third day of our joint BCM held on standards and auditing, jointly organized by Kozhikode branch, Thrissur branch, and Palakkad branch. The first day of BCM was chaired by a learned faculty and a learned speaker and a non-member for all, CA Jomon K. George, member of SARC. Covering the standards on 220, 500, 501, 570, and 580, which is relating to the quality control, audit evidence, going concern, and written representations, followed by a second day, which was taken by a lone faculty again, Mrs. C.A. Bhavani Balasubramaniam, covering the standards on audit planning, materiality, assessed risk, and auditors' response to the assessed risk. And today we have a lone faculty, CA ANIKET TALATI, Central Council member, who will be taking through the standards on forming an opinion and report on the financial statements, communicating key audit matters in the independent auditors report, and modifications to the independent auditors report, and response to the other informations contained in the documents of financial statements. I request Mr. Sumesh to play the motto song.
Sound is not coming.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. Mr. C.A. Babu Abraham Kalivel, a Central Council member, will be joining soon for the felicitation program. I request Kozhikode branch chairman, C.A. Arun Subramaniam, to give the welcome speech.
Good morning, members. Good morning, all. The respected faculty for today, CA ANIKET TALATI, my fellow colleagues and chairman, CA Vinod sir and CA Aryan sir, other committee members of board of all the branches, and my dear respected members. First of all, a warm welcome to all of you. So we have been witnessing a series of seminars for the last 2 to 3 days regarding auditing standards. So as you all know, auditing standards play a major role in our day-to-day professional life as well as our practicing life. We have to be very careful in the means that we should get updated on recent updations which is happening on the standards, so that our staff or our fellow colleagues just understand all the standards, because at majority of the offices we will be just superseeing the work, and most of the work will be carried on by our junior articles or our fellow staff members. So updating them also on this auditing standards plays a vital role. So in this behalf, we 3 branches have taken this initiative so that members get updated themselves on the recent updations happened on the standards on auditing part. And also now the industry or the regulators are really strict on the presentation part as well. There has been recent changes from the regulator side on the presentations of balance sheet or on the schedule part as regard to MCA, or as such on the auditing report parts, audit report parts, which is undergoing a very big changes in the recent past. So today we have selected standards mainly covering these areas where audit opinion forms a major part of our reporting. So on this topic, we are today blessed with a good faculty from Ahmedabad and a Central Council member, ANIKET TALATI, who will enlighten us on SA 700, 701, 705 and 720. On behalf of Kozhikode branch and all the other 3 branches, I welcome you, sir. Next, I take this opportunity to welcome all the members who have joined today's session. We know that it has been continuous session for last 3 days, but still today now the membership, today the number of participants have crossed 100 right now. So we are expecting more members to join. And also I take this opportunity to welcome all the fellow branch committee members and chairmen to this session. Thank you all. Over to Surya.
Thank you, Chairman. Now I request CA Vinod Menon, Chairman, Palakkad branch, to introduce the speaker of the day.
Thank you, Surya. It's pleasure introducing our speaker of the day, ANIKET TALATI, Central Council member of ICAI, also a director at ICAI Accounts Research Foundation. He's a partner in TALATI and TALATI LLP. Also, we all know that son of past president, great Sunil TALATI, sir. He's a financial executive with broad experience in all aspects of accounting, auditing, taxation, and financial management. Direct experience with real estate, financial consulting, and venture capital. Also interested in early stage startups as well as companies on the bubble. He did his article assistant with PricewaterhouseCoopers and bachelor's degree in commerce from University of Mumbai and post-graduation from Indira Gandhi Open University, and completed his LLB from Gujarat University. In the interest of time, we have only 2 hours session today, and our speaker is very familiar to all of us. So I'm shouting his profile, and with this I am presenting our speaker of the day, ANIKET TALATI, to all of us.
Thank you so much, Vinodji, for the wonderful welcome and the introduction. I believe, yes, this is not a formal introduction. Vinodji had mentioned that he is looking up on the social media platforms, and I think only in a state like Kerala you will find that people are so updated that you are not only looking at the prepared introduction that is provided, but also sourcing the content from other things. And I think that augurs well for our profession. So thank you very much, the Honorable Chairman of Palakkad Branch, Vinod Menonji, for the introduction. The host for today, as I'm given to understand, is Kozhikode Branch. And Arunji, thank you so much for inviting me, for always keeping me updated about the topics, the sessions, and also great to understand that our own MPV sir, who had come in the inaugural session, to kick off this series. And then my dear friend Jomanji, who was past chairman of SIRC, had taken a very important session on audit evidence and the 500 series. Thank you very much to RNG and the entire team at Thrissur branch. Let me share with you honestly, dear colleagues, Kerala is very close to my heart. It is within the country. If somebody had to say what is the first place you would like to go, in my mind, it is going to be Kerala. So thank you once again, RNG, Arunji and Vinodji for inviting me. In fact, our last council meeting was in Kerala. My previous 3 vacations have always also been in Kerala, and my entire family is extremely fond. So after this pandemic, hopefully when the virtual is lifted, I would look forward to once physically visiting your branch also and enjoying the beauty of not just the nature of Kerala, but also the wonderful people that you have in your state. So thank you very much.
Thank you.
And I would like to compliment all the 3 chairmen for setting up this very important series. I think Arunji briefly mentioned about the importance, growing importance of standards on auditing in our profession. And believe me, I'm saying this with all sincerity. I'm told Babu sir is going to join. Sir has been on the disciplinary committee, even now is probably a member of one of the benches. Any member, and I'm saying this with a lot of confidence and having seen the council for 3 years now, any member who has an auditing issue that has been highlighted or complaint which has been raised against him in the disciplinary committee, if he has to prove himself not guilty, if he has to prove that he was innocent of whatever has been charged in terms of gross negligence and not complying and not conducting the audit properly, nothing is a bigger savior to you than your own standards on auditing issued by your very own institute. So please, if anyone in your mind has this misconception that this is compliance, this is just for the sake of it, let's be very clear and categorical at the beginning. Remove it from your mind. If you know the standards on auditing, more importantly, the requirements that are inscribed in these standards, nothing in this world can go against you. Tomorrow, your client may go down, he may go under, there may be certain bankruptcy that may happen, there may be other difficulties that he may face because of liquidity. But if you have performed your work as per the standards on auditing, and most importantly, issued your report as per the standards that we are going to discuss today, the 700 series, I'm 100% confident you will be able to defend yourself, not just in the disciplinary committee or the board of discipline, but even if NFRA, SEBI, SFIO, CBI, or any other investigation agency was to pick up the financial statements, they may question the promoter for what he has done, but at least you can very well justify that you have done your task of being an auditor most diligently. But for that, I think one change that I will request from all the over 100 participants that are attending this session, let's all promise and resolve one thing. Let us all promise that we will no longer use the copy-paste mechanism. We are used to copying and pasting the previous year numbers to current years, copying and pasting previous year's audit reports to the current year, and also copying, pasting from other balance sheets and other annual reports and putting that without understanding the context. So I request all the members as we start this series and of 700 today, please let's ensure that under no circumstances do we simply rely on what was done in the prior year or what has been done by, let's say, one of the larger auditors in another entity. Each organization is different, each auditee is different, and therefore each report has to be different. With this, I would only state that the beautifully structured 3 days course, which started with audit evidence, which I would call the meat, the real substance of audit. It is where your actual work lies as an auditor. How are you vouching? How are you verifying? How are you looking at invoices? How are you looking at collecting information? How are you obtaining assurance for yourself that yes, accounting standards have been complied with, Companies Act and Schedule 3 has been complied with, other regulations have been complied with. That task is covered in the first session of audit evidence, and that was done. And the culmination of this entire process is in the form of issuing your report. So like I said at the beginning, let's avoid copy paste. We are specifically today in the COVID era, and you would all appreciate if other professionals were to do a copy paste. Let's say our doctors in a state like Kerala, which has the best medical fraternity, even in doctors and the support staff, if they were to simply copy paste and a patient goes, assume last year and went with a corona and he says, no, I will copy paste from last year and gave him the medicine of maybe chikungunya or malaria, would it cure him? Answer is going to be definitely no. If you went to an architect, you have such beautiful buildings, such beautiful hotels in Kerala. Let's say if all architects use copy paste, I was in Cochin, I was in Thrissur, I was in Kozhikode or Palakkad, I would see the same building everywhere. Where is the beauty then? So if doctors cannot copy paste, if architects don't copy paste, we are also professionals. Let us understand that the art of a chartered accountant is the art of expressing himself through the auditor's opinion. I say this invariably. We do not talk as auditors. The only mode of communication as auditor is through our report. So let that report speak for itself. The doctor talks through his prescription. His prescription has cured you. You will always remember him. The architect talks through his drawings. He makes a 3D replica of it. He makes a beautiful building. That is his statement of making sure that, yes, I am the best. So if you want to make that statement of I am the best, let us ensure that we leave alone the copy-paste mechanism. And more importantly, like I mentioned, conclude on the opinion in a manner which has been prescribed in these standards, because that is what is going to be extremely critical and important. The culmination of all these standards that has happened from the 200 series to the 500 series to the 600 series, where you're relying on other persons. The 700 series is the end. It is the penultimate place where you issue your audit opinion. So with this, I would begin my presentation, and if you can just confirm it is visible on your screen.
It's okay.
Yes, sir.
It's okay.
Wonderful. So I will start with what is the main basic standard for issuing an opinion and reporting on financial statements. Whatever audit one has performed, it may be the statutory audit under the Companies Act, it may be other audits under various acts that you are doing. If it is an audit, then your audit report ought to come from the 700 series. This is the series which gives you your reporting mechanisms. If it is an unqualified opinion, which we in our general parlance call as a clean report, everything is okay. You have ensured standards, disclosures, Companies Act compliances, which would typically happen in, I would say, 90 to 95% of the cases. Then this is the go-to standard. This is where you will issue the report. Only yesterday, somebody messaged me and asked that it is not a corporate entity. It is not a company. Arun sir, if you can please mute. Yeah, thank you. So only yesterday, somebody asked me that the entity wishes to get its audit done. That is to say, the tax audit limit for this year is not being achieved, but they want to get themselves audited. They want to ensure that they have a set of financial statements which has been verified, attested, and assurance provided by a chartered accountant in practice, so that they can use it for internal purposes, for supplying it to the bank. So though tax department may not need it, they want to prepare the financial statements. In those cases also, if you are issuing an audit report, you ought to do it through your SA 700. So an encompassing standard, very basic, but very, very necessary. And the latest amendment to this standard came in on April 1, 2008. You will be surprised, friends, and you can go back and check your own reports for 17-18 issued in the year 2018. Many of us have actually, in fact, not changed the format in that year. The opinion paragraph was moved at the top. There were changes in the structure of the reporting. Yet, many have not updated this in 2018. Sorry to say, some even today are continuing with the old format. So for all of you who are attending this, let this be a new awakening. If you realize your mistake today, if you realize that you are not complying with the standard, let's try and start improving today. Because once, like I said, if you improve and comply with these standards, you are insulating yourself from the disciplinary mechanism, from any inadvertent reactions that may come to your audit opinion. Therefore, I would only urge and request all of you, please comply with them. Don't look at this as a compliance mechanism. When there's a program on GST and income tax, we have 500, 700,000 participants. Why? Because you have something to earn. You can learn something which you will put to the client and make him earn. Sir, he will earn, you may get a fee. But if you don't comply with your standards on auditing, you will learn the hard way, and all that you have earned may have to be spent in defending yourself in legal cases. So please look at it this from that perspective. And that is why the Institute has mandated minimum hours on standards in auditing, because we truly believe that once the understanding of these standards is there, the expectation is set right amongst our membership, then the overall quality of audit will definitely increase, and the trouble that our members inadvertently end up facing will be avoided. So with this, let us begin our journey of SA 700. Certain acronyms that we have used in the presentation, just for your reference sake, I will be sharing this entire presentation with the branches for onward dissemination to all the participants. The FS, wherever used, will mean financial statement. 3-4 very important abbreviations, which all of you should know because they will be used extensively in the future. TCWG, those charged with governance. So we used to use the word management earlier, but now management is sometimes different and those charged with governance are different. I'll give you an example. The board is those charged with governance. Now, independent directors are also a part of the board, and they are not in the day-to-day management of the entity, but they are charged with governance. And therefore, TCWG, very important reference point. FRF, you will see it across the standard, the financial reporting framework, under which framework you are making the report or the account or the accounting standard, the financial statements. What are these frameworks? As you are aware, the accounting standard rules specify for Ind AS entities, that is listed entities and 250 plus net worth turnover, you will have Ind AS. So that is a financial reporting framework in itself. Our existing accounting standards that were notified in 2006 accounting standard rules, the 1 to 32, only 1 to 29 which we apply, those are also accounting standards and a financial reporting framework. Very important words. As we are know, is material misstatement. We will now, in this today's session on SA 700, try and understand the scope of this standard, the definitions that are going to be covered, the objective of why this standard has been there, what are the requirements, the R, the capital R as I like to call it, you will see it in your code of ethics in all standards now. These are the bare minimum requirements that an auditor, a chartered accountant ought to follow. We will look at the form of opinion, the report, and the appendix, that is the illustration audit reports. So, the scope of this standard SA 700, the reporting standard. In any examination, for example, you go to a hospital, they will examine you, they will take your pulse, they may check your oxygen, they may do other vitals, they may do certain tests. And what is it? The final is the report of the doctor. In a court case, lawyers may argue the final decision is given by the judge in the form of a judgment. Similarly, you have gone through the audit standards earlier of audit evidence and others that were there arranged by the 3 branches. The culmination of this session is in the form of the report. So that is why the ultimate, if not the penultimate standard for your conclusion of your entire audit process. You start with planning. In fact, you start with SQCs, whether I should accept the engagement or not. What should be the procedures, the documentation, the ethical requirements. You then move on to planning. You then do the execution before you have ascertained the materiality and other items. You look at audit evidence. You complete the entire audit procedures. You rely on other experts and conclude and come to an opinion. So this standard deals with your responsibility as an auditor to form an opinion. And here, very important fact that I would like to share with all of you, dear colleagues, audit involves issuing an opinion. where you have to give an opinion as a professional. It is not a fact-finding exercise merely. In internal audit, more importantly, in forensics, it is a fact-finding exercise. There is, at the conclusion, a summary of findings. You may call it a report, but it is not an audit report. It is a forensic accountant's report. And therefore, even the standards that are coming out for forensic are referred to as Forensic Accounting and Investigation Standards, FAIS. The certificate course of the institute is Forensic Accounting and Fraud Detection. So it is forensic accounting. Audit, when we are coming back to SS 700, involves issuing an opinion. You have to state whether it is true and fair. So therefore, the scope of this standard is with the responsibility of auditors to issue an opinion. It gives the form. The form means the body, the format of the report, and the content, what is going to be part of the report, that has been covered in this standard. Very important. Many people make this mistake. They say, yes, report is as per SA 700. In fact, they have given a qualification or an emphasis of matter or other matters paragraph. All of those are not covered in this standard. SA 700 fairly and squarely only and only deals with the unmodified, that is a clean report. Qualifications, that is qualified opinion, adverse opinion, disclaimer of opinion, all in 705. Emphasis of matter, other matters in 706. And what does it apply to? It applies to audit of the complete set of general purpose financial statements. General purpose, name itself suggests general. You know general category. General means anybody can use it. So banker uses it, you are okay to use. Shareholder uses it, you are okay to use. Governments are using it, you are okay to use. General public, all stakeholders can use the financials. Those are called general purpose financials. If you are issuing a special purpose financial, then it has to be as per SA 800. Question here for some of you can be, what is then a special purpose financial? I'll give you an example. You are doing the audit of an entity. Let's say it is an NBFC and or any other entity, and Ind AS is not applicable to it. So you have prepared the financials as per your IGAP, the AS 1 to 32. But for some group reporting purpose, some consolidation purpose, the management says we also want a IFRS or a Ind AS kind of a financial statement. In these scenarios, when I'm specifically talking in Kerala, let's say your holding company or some other entity in Dubai wants it for reporting purposes. So you prepare in India based on your Indian reporting standards. That is the general purpose FS. But if it is a special purpose for group reporting purposes, etc., then it is dealt by SA 800, which we are not discussing today. And if there is a single FS or element of FS, that is dealt with by SA 805. Sometimes you may require a separate set or some element of the financials. Let's say repair and maintenance expenditure is there. Generally, what do? We give a schedule to it and there is an opinion. But it is desired that no, on that element of financial statement also auditor must separately report on. Those all kind of reports are covered by SA 805. And what is the most important purpose of SA 700? It promotes consistency and comparativity. Today, if you pick up an audit report of any company in India or even in the world, you will see that the report is practically almost same. Yes, we have a CARO requirement in our standards, which is slightly different. But pick up any audit report of, let's say, a Facebook, Google, Amazon from the US, or any large company in UK or Australia. You will see our standards on auditing are exactly the same because AASB adopts the International Auditing Standard Board's standards on auditing, which are also adopted by US, UK, and other countries. So the report, if you look at across the world of the auditor in SA 700 is the same. And that is the scope of this standard, to promote consistency. What are the objectives then that are laid down in this SA 700? Well, as an auditor, you have to, one, form an opinion. So come out with your opinion that whether this is unqualified, requires a qualification, that is the form for modification, a disclaimer, an adverse opinion, or an emphasis of matter or other paragraph. All of that culminates through the standard. And what is that based on? Evaluation of conclusion drawn from audit evidence obtained. So the first session that Joman Georgie took with regards to audit evidence, forming of an audit opinion. You have to form an audit opinion after looking at and evaluating the conclusions of your audit evidence. So the meat of the standards, like I said, the 500 series, what are the evidences you obtained? Whether there is a material misstatement occurring or not. After that, you have to decide and form an opinion on the financials. And you have to express clearly that the opinion has to be through a written report. An auditor's report cannot be oral, and the opinion has to only be in written format. What are then the definitions? A general purpose financial statement, like I said, it is a financial statement prepared in accordance with a general purpose reporting framework, what is prescribed in the Companies Act, the accounting standards which are issued by the ICA. What is an unmodified opinion? An unmodified opinion is an opinion expressed by the auditor when the auditor concludes that the FS are prepared, the financial statements are prepared in all material respects in accordance with the financial reporting framework. So unmodified means you as an auditor are saying, yes, okay, financial statements are prepared materially with compliance with the accounting standards in the reporting framework which is prescribed. What are then the main requirements? What is it that as an auditor you have supposed to ensure before you form an opinion? Two very important aspects. Whether financial statements are prepared in material respects with accordance with the financial reporting framework. So if, for example, accounting standards, you see that the entity has 300 employees, but there is no provision of gratuity that it has done. And you know that the company was incorporated in India, provisions of Gratuity Act will apply to it. Yet there is no provisioning of it. The provisioning is not there. The disclosure probably as required under AS 15, forget it because the amount is not provided. So your profit is overstated. Had you provided for the gratuity, your profit would have been lower. So one aspect is the non-compliance of recording that expense on your P&L and consequent effect on profit and reserve. Second, you have not disclosed what are the number of employees as required under AS 15. What is the implication that it will have? All of that is also a non-compliance. So if it is non-compliant, then you are not issuing a SA 700 report. But if it is prepared in material aspects in accordance with your accounting standards, then you will use an SA 700 report. So for example, inventory valuation, the management has worked out the inventory valuation. They have stated this is on the basis of FIFO. They have also stated that they have used the cost or NRV, whichever is lower, and very clearly valued inventory on that basis. Even after that, there is, let's say, a 20,000 rupees difference between how you arrive at the valuation and the valuation of the company. And the company has a turnover of 300 crores. It is not a material amount. So though you are not agreeing and therefore there's a deviation in the application of the accounting standard, because it is not material, you are not going to then issue a qualified opinion because SA 700 requires material. In material respects, you must confer with the financial reporting framework. And to form this opinion, auditor needs to conclude whether auditor has obtained, very important, reasonable assurance that financial statements as a whole are free from material misstatement. An auditor never ever provides absolute assurance. The role of the auditor is fairly and squarely to give a reasonable assurance if he is doing an audit. If you are in fact doing a limited review, then it is not even reasonable assurance. The word that limited review uses, or the review report, SRE 2400 or 2410 says is limited assurance. Only to a limited extent I am giving an assurance. So for your quarterly reviews, you will give a limited assurance. For the annual, you will give reasonable assurance, but under no circumstances are the word absolute assurance being anywhere covered in our standards. Be very careful, because tomorrow if somebody finds a small error and says, well, I found this mistake, we have to be very clear in our answer that the objective of an audit is to give reasonable assurance. And therefore, if the amount is not material, you can absolutely clearly state that I have only given a reasonable and not an absolute assurance. This one chart in front of you is the crux of the entire SA 700. This is the step-by-step mechanism. Arunji in the beginning mentioned that our articles are undergoing a lot of the audit procedure and we are only reviewing. So if you are only finally coming and issuing the opinion, please make sure you have this chart on your desk and you are able to see that yes, all these steps have been followed, and only then auditor's opinion in the form of a report is issued. What is the first step? Whether the financial statement adequately disclose significant accounting policies. Yes, one, accounting policies have to be there. So you will know there is a balance sheet. You will know there is a profit and loss account that nobody can miss. If cash flow is applicable, ensure cash flow is there in the part of the financial statements. After which you have to ensure that the accounting policies have been disclosed. A lot of errors people make in this. Let me share with you. One example, you have noted during the year there is no impairment. You saw the value of all the assets that are lying in the financial statements. You have looked at its market value and you've also looked at it as a cash generating unit, discounted the cash flows it will generate in the future, and arrived at a conclusion that no impairment is necessary. Very good, you have done your duty. But the management also ought to have disclosed in its accounting policies that we have a robust procedure for testing for impairment on an annual basis. So don't make the mistake that because there is no impairment, there will be no notes for impairment of asset. This note to account always used to be. So these are all different accounting policies. Many of us, because we feel there is no transaction of this nature, we don't give an accounting policy of this effect. No, management ought to have given a accounting policy for impairment, because as we know, preparation of financial statement is a responsibility of management. We are only issuing the audit report. So if in the management's financial statements, for example, this impairment accounting policy is not disclosed, ensure it is disclosed, or you will have to suitably amend your audit opinion. So if they are adequately disclosed, consistently and appropriateness of accounting policies with the financial reporting framework. So if the company has listed or the net worth has exceeded 250 crores and they ought to be applying Ind AS and they are still reporting on the erstwhile IGAAP, it is not the correct financial reporting framework to follow. Similarly, if there is a sudden change in one of the policies, that again would mean it is not consistently applied. So if it is consistent and appropriately applied, then you look at the reasonableness of accounting estimates. What are the accounting estimates? These are management's judgments and assumptions. What will be the growth, for example, when you're estimating the retirement benefit obligations? They will tell you we are expecting a growth of these many employees, a salary growth of this month in the future. If you're doing a company in Kerala, you are seeing in the past every year there's a 15% increase they are giving to their salaries to all the staff. Then, of course, in the next years, if the company is giving an assumption of only 2%, why? Because they want a lower actuarial valuation report and a lower liability to hit the P&L and balance sheet, then it is not a reasonable accounting estimate. So as an auditor, ensure that these accounting estimates are reasonable. Whenever the company is saying no, provision is not required, there is no requirement to provide for this expense in the books, we will show it as a contingency. It's an estimate. Look at what the papers say. It's a court case. Study what orders so far have been received. You may ask for a legal opinion and take that advocate's opinion. What is their understanding? You will rely on an expert and then decide whether the accounting estimates are reasonable. So disclose all policies, look whether the policies are consistent and appropriate. The accounting estimates are reasonable. Then look at the relevance, reliability, and comparability and understandability into the financial statements. If there is too much jargon, you put words which nobody can understand. Remember, this is general purpose financial statement. The whole world is going to use it. There are stakeholders who are not experts. They may be using it. So it has to be understandable. It has to be relevant. The financial statements or the annual report cannot discuss anything or what they want. It must be relevant to the financial statement. Then disclosures have to be adequate to understand the effect of material transactions. During the year, the company has acquired a subsidiary. There is a merger that has happened. After the balance sheet date, there is an NCLT order which is affecting the status of the company. Various other transactions of large nature. There is a huge insurance claim which the company has launched. There is a fire in the premise. These are all important events. You have to look whether they are disclosed so that users are able to understand these material transaction or events. You will see a lot of companies give specific notes because there are specific events that have happened in the year which have a material transaction effect. Those have to be disclosed. Ensure the terminology which is used is appropriate. They must refer to the applicable reporting framework. So the first note in the notes to account of any financials, the company ought to disclose what is the basis or the financial reporting framework on which they have made. They cannot simply say books are made on accrual basis and finished. If it is a partnership firm, please not. You cannot allow that. The reporting framework, if they are using the accounting standards of ICI, even if it's a partnership or proprietorship, ensure that is sufficiently disclosed. And the financial statements have to be prepared in material respect with this applicable reporting framework. The qualitative aspects of accounting practices, and if there is a bias in management judgment, that will have to be considered. Then you go to the materiality of uncorrected misstatements. So there may be one misstatement. You look at one account, you look at inventories, there's a 20,000 difference. You move across, you look at some other investment valuation, you see that there is no diminution of 50,000 rupees. You go ahead, you look at some other transaction, and you see that this interest ought to have been capitalized. There is a 80,000 rupees interest as per borrowing cost standard that had to be capitalized. Individually, they may not be significant. But if you put together, they in toto may exceed the threshold of materiality. If that happens, you cannot leave them as uncorrected misstatements. They will have to be corrected and recorded. If not, your opinion has to be modified. And finally, you see that, yes, the audit assurance has been obtained as per SA 330. Conclude on a reasonable assurance and form an audit opinion. Therefore, what are the forms of opinion? If it is an unmodified opinion, you issue SA 700. If you are issuing a modified opinion, that is to state that there is a audit evidence obtained where you conclude that the financial statements as a whole are not free from material misstatement. There may be one transaction which is material and the company has not disclosed it, not provided for it, not made the necessary treatment of it in the financials, not done the correct disclosures. It may be one such transactions or 2 or 3 transactions in total, but if they amount to a material number, then you have to go to SA 705. And if you are unable to get sufficient and appropriate audit evidence, SAAE, sufficient and appropriate audit evidence, then if you are not able to obtain that, and then you conclude that the financial statements as a whole are free from material misstatement. So there can be 2 situations. You get evidence, but the amount that you calculate in your understanding, your perception of the transaction, your auditor's mind saying this is how this has to be impacted on the P&L impact, balance sheet impact, disclosure impact. Then SA 705, the management refuses to say. You find there is an expense of, let's say, a contractor for 5 crore rupees or 15 crores rupees. And you tell them, can you please give me the contract on what basis this payment has been made? Can you please give us the agreement? What were the terms? Can you give us the board resolution or any meeting of the purchase committee where this has been approved? And the management says, no, we don't have any evidence. We don't want to give you anything. We don't have anything. Then you have to determine whether you have obtained sufficient and appropriate audit evidence. If for such, let's say, this transaction of 15 crores paid to a contractor, you are not obtaining a sufficient and appropriate audit evidence, then also you will have to go to 705. You cannot use the reporting as per SA 700. So, if the FS are prepared in the fair presentation format, I will not discuss it because not very relevant. But if you look at the second half, if the FS is prepared in accordance with the compliance fair reporting framework, then you don't need to evaluate if the FS is achieving the fair presentation, because it is a compliance framework. Whatever standards are given under the Companies Act, for example, whatever standards are given under the local laws, if they are complied with, then you do not need to evaluate if the FS achieve fair presentation, because that is not a target. What are then the elements of an audit report? Basic elements. At the bottom, one additional element which now has been included under the revised Code of Ethics Volume 2 is the requirement to issue UDIN. So only to that extent, the SA 700 doesn't cover UDIN, but the fact is, because this is a generally accepted auditing practice notified under the Code of Ethics, therefore SA 700 is not required to be amended. But yes, that overriding principle will come here. So don't just restrict yourself to this. If it's a report in India issued by a practicing chartered accountant, the last one will be the UDIN. You need a title, addressee, whom you are addressing it to, your opinion. Like I said, 2018 onwards, this has come first. Earlier reports, if you look at auditor's report, opinion used to come a little below. Now it is at the top, because what is most important should come at the top. That is the principle. What is the basis of your opinion? If going concern as per SA 560 is applicable, then going concern. If it's a listed entity, key audit matters paragraph. Other information, wherever it is applicable. Clearly state the responsibilities of management for the financial statements. In so many cases, one has seen, and you would have also read in newspapers, that a businessman or a somebody who's doing certain trading activity gets arrested, and he simply says, "Sir, wo sab to hamara CA dekhta tha. My CA used to look after all of that." Sorry, if your auditor's report very clearly will have to state, because management cannot run away from its responsibility of saying what is it that they ought to do. In your report also, you should re-emphasize this is the responsibility of management: preparation of financials, implementing internal financial controls, implementing internal controls. That all is the responsibility of management. What is my responsibility? I just have to look at A, B, C, D, which we will discuss. Other reporting responsibilities, for example, CARO and IFC, signature in person, place of signature, where have you signed, date the report, and like I mentioned, at the end will be the UDIN report. Title. The title of this is the first and most important aspect of the report. It should clearly indicate that the report is an independent auditor's report. Even today, many of us are issuing an audit report under SA 700, but saying auditor's report. Sir, please, the requirement is independent auditor's report, because you have to affirm. Sometimes you have to clearly state that I am independent. I have met with the ethical requirements of independence, and therefore I am the independent statutory auditor of this entity. Don't use the word statutory, but you have to report it as independent auditor's report. That word has a lot of meaning. The Prime Minister says Prime and Minister. If he simply signs Minister, it has different connotations. It can mean any minister of the Union Cabinet. Similarly, if you simply say auditor's report, it can mean internal auditor, it can mean management auditor, it can mean concurrent auditor, it can mean pre-auditor, it can mean forensic auditor. There are tens of different stock auditor, etc., etc. There are 15 different ways of addressing an auditor, but only one independent auditor. So therefore, title must be of independent auditor, because you have to distinguish yourself from all these others, from the internal auditor, the management auditor, the concurrent, stock, forensic, etc., etc. These auditors are different. The information systems auditor, I can go on. The list is endless. Independent auditor is the unique post, unique title, and therefore you must address it as such. Who is then going to be the addressee to whom the report is addressed to? Well, it must be addressed based on the circumstances. Normally, it is addressed to those whom the audit report is prepared for. Under a Companies Act, our appointment as auditors is done by the shareholders in the AGM, that is the annual general meeting. Therefore, the audit report has to be addressed to the shareholders of the company. In case of a partnership, the owners are the partners, and therefore you address it to the partners. In case of a trust, trustees are those charged with governance, and therefore you address it to the trustees. In case of cooperative society, all the members of the cooperative, they are the members, and therefore you address it to them. So please ensure in any report that you give out, company shareholders, partnership or LLP to all the partners, to trustees, that is TCWG, those charged with governance. Similarly, whatever is the form of organization, address it to the correct entity. The opinion paragraph, the first paragraph, there are two parts, two paragraphs. The first paragraph, you identify the entity. So the name of the entity, you have to mention whom you are dealing with, the name, exact official name of the entity. Look at the ROC records. If it's a private limited company or a LLP, ensure that you are reporting the exact appropriate name as per the records of the registrar. If there is a name change, in the bracket we mentioned previously known as, so that the users of the financials can understand that this is the specific entity that the auditor is opining on. So exact name. If it is not a company or LLP and there is no master data, I would suggest use the name as per PAN. Always, please, the chairman Arunji mentioned that articles are preparing. Yes, in all firms it is the case. Articles, staff will come and prepare. But he very rightly mentioned that we have to check and verify in the final before we sign. So at that time, when the audit report comes to you from your article or your staff, see the name. Check whether that name is as per ROC records and as per the PAN records. Very important step for you to follow. So identify the entity from to whom it is addressed, and then the second paragraph will cover the auditor's opinion. What does the coverage of the first para have? Identify the entity, state the fact that it is an audit report, because it may be confused with the review report, a compilation report, internal audit report, etc., etc. So it is an auditor's report. And title of each statement which comprises the FS. Many times one has seen there is no cash flow. Company does not have to prepare, the company has not prepared. Yet, because we copy paste the audit report from somewhere else, we state the balance sheet, the profits and loss account, and the cash flow as on this date. And when you go to the next page, there is no cash flow. Sir, please identify correctly and state which are the components comprising the financial statement. If cash flow is there, cash flow. If not, not. Balance sheet, P&L, only two, then refer to the two. Refer to the notes, including summary of significant accounting policy. You will have to mention that the financial statements cannot be read by themselves in standalone basis. They ought to be read in conjunction with the significant accounting policies. Specify the date of or the period covered. So if it's year ending, please mention the year ending. If it is for the full year, mention for the year. If it is as on a particular date, 31st March 21, as on 31st March 21. In many cases, again, one has seen, especially if it is the first year of preparation, people say during the year, instead of saying from 1st of May 2020 to 31st of March 2021. If it is a limited period, that specific dates and the specified period covered must be given. Please be very specific and cover this. In fact, even in the opinion, many members are referring to the profit of the year. I can show you hundreds of balance sheet because we copy paste, we say profit of the year has been verified. And if you look at the numbers in the P&L, there is a loss for that year. But because of the copy paste that I discussed at the beginning, even today, many audit reports, though there is a loss in the P&L, you will say profit for the year. If the company makes the mistake, it's okay. But as auditors, you only have these 5 pages, which is in fact your own responsibility. Others, you will easily state that it was the management's financial, it is his responsibility. But at least your 5 pages, I would request and urge all participants attending today's session, ensure you are reading word by word, line by line, and such small mistakes of the wrong entity name, the wrong period being mentioned, or using the word profit in place of loss, those errors are not being committed. So what will you mention? In our opinion, the company financial statements are prepared in all material respect in accordance with what? If it is a company, quote the accounting standards rules and the Companies Act. Because the companies are not preparing accounting, they're not preparing the financial statement as per accounting standard issued by ICAI. For companies, there's a specific compliance framework issued under the accounting standard rules, where in the accounting standard rules, which have been notified under the Companies Act, the applicable standards are given. Ind AS for a particular class of companies, the IGAP for other class of companies. So refer to that accounting standard rules. Even today, in so many small balance sheet, one is seeing that what are you doing? You are only and only with regards to the compliance framework stating this has been prepared in accordance with accounting standards issued by the ICAI. Sir, understand the process under the Companies Act 133, what has been provided, that the institute will frame the accounting standards, the ASB. Council approves it. It goes to NFRA. NFRA recommends it to the ministry and ministry notifies it. I agree that the standards which we as the institute are going and giving forward are notified finally by the ministry. But still, your compliance framework is not just the standards issued by ACI, because they have been accepted by NFRA, recommended, and in turn notified by the ministry under the Companies Act through the accounting standard rules. So then, in case of all companies, ensure that you are stating that they are in all material respect in accordance with the applicable financial reporting framework. Basis of opinion paragraph will be given immediately after the opinion paragraph. You have to give an affirmative statement that yes, my audit was conducted in accordance with standards on auditing. And why do I say that? Because if your standards on auditing are not referred to, tomorrow if the matter goes to disciplinary, you will only have to fall back to your standards to prove your innocence. For example, you have done sampling and the complainant says, no, you should have seen 100%. Why did you see samples? You can quote the standard on auditing and say, my standards require me to draw out a sample. I have done on a sampling basis. The difference is not material. The complainant says he has not found the error of this 35 rupees in the financial statements. You can say my standard clearly provides for the definition of material misstatement, the definition of planning materiality, and the materiality for the financial statements. I have complied with the materiality requirement of standards auditing. Therefore, it is in our interest to state that audit is conducted in accordance with essays. Refer to the section of the audit report that describes your responsibility. So that reference ought to be given. You will also have to include a very clear-cut statement. This has been introduced 3 years ago, that the relevant ethical requirements, that is to say the ICAI's code of ethics issued by the Institute of Chartered Accountants of India, have been complied with. So that is very important. And you have to state whether the auditor believes that the audit evidence obtained is sufficient and appropriate, SAAE, sufficient and appropriate audit evidence to provide a basis for auditor's opinion. Very, very important part of this session that I'm taking with you today with regards to going concern, especially when we are in this COVID era, when there is a lot of uncertainty that exists. A lot of entities have had to remain closed due to lockdowns or containment zones and other reasons. You are not able to know whether there will be continuity and the entity can continue as a going concern, meet its debt obligations, continue to earn profits, continue to earn revenue, and then pay for its expenses. These are all challenging times. Many non-compliances that one has seen is because of non-compliance of the SA 570 on going concern. Use of going concern basis of accounting if it is inappropriate, but the financial statements are prepared using going concern. So you as an auditor are convinced that there is no way this entity can continue on a going concern basis. The director's report states the company's future is bleak, industry is dying. The profit and loss account has a huge loss. The balance sheet has a negative net worth. The operating cash flows in the cash flow statement are negative. All of them satisfying the clear-cut condition, the management acknowledging that there is no future. Yet, if you look at the balance sheet and the accounts, you say accounts are prepared on as per accounting standards of accounting standard rules or issued under the Companies Act. Everything is hunky-dory. My valuation of inventories is based on this. No. If it is clear that going concern is impacted, but you have not recognized the expenses correctly and the management still continues to prepare the balance sheet on a going concern basis, you have to express an adverse opinion. There is no option, dear friends. 570 is crystal clear. Issue an adverse opinion. So if it is dead, you have to call it dead. If a patient has expired, the doctor will come and say he is dead. You cannot, no, he was my patient for 30 years. I used to give him medicine. He used to come to my home. I went to his wedding. Very nice he has been to me. So I will call him alive. No doctor will do that. Similarly, as a professional, you may have been attached to the company for a lot of years. But if it is dead, if there is no going concern, issue an adverse opinion if the management still wants to stick to it and say that entity is preparing as per going concern basis. Use of going concern may be appropriate. So yes, you are saying company is not going to finish or end tomorrow, but material uncertainty exists. So there is an uncertainty which may be of a material amount. There is a huge claim which is made on the company. It has violated certain copyrights. And the claim is so huge that tomorrow if the company has to pay that amount, it may result in a material amount getting out of its hand. The entire cash flows and everything will get disturbed. Then, if it is adequately disclosed, so the management has acknowledged that yes, there is such a transaction which may have a material uncertainty, and they are disclosing it in the financial statements, then you can express an unmodified opinion. That is as per SS 700, but include a separate section in your audit report which talks about material uncertainty related to going concern. Highlight this fact. So you will use SS 700, but you will have to ensure that this material uncertainty is referred to in your audit report. Very important. So therefore, company doesn't acknowledge, but it is suffering going concern, adverse opinion. If they acknowledge and disclose material misstatement, then SS 700, but separate section deals with this going concern issue. And if going concern basis is appropriate, so you are also convinced management is maybe in the audit, the management report saying somewhere highlighting to the fact, but the material uncertainty is not adequately disclosed in the financial. So this example that I gave you of a huge claim that has come on the company. COVID has induced certain technical or financial stress or burden on the company, and they are not able to meet their debt covenants. Various other aspects which may result in a material uncertainty, and the management does not disclose this in the financials. Then you have to go to 705 and express a qualified or adverse opinion. So I hope it is very clear. If going concern issue is there in terms of a adequate disclosure in the financials, then SA 700 along with the paragraph. If not disclosed in the financials, but it's a material amount, qualify or adverse opinion as per 705. And if the company is not accepting only the financials and continuing to prepare the financials in going concern without disclosing, and entire going concern is impacted, then adverse opinion. So I hope there is clarity. Whatever is the case, remember, if there is a going concern issue, there will have to be some form of modification in your report, at least not if at per 705 or adverse opinion, then at least in the form of a separate paragraph or a section which talks about material uncertainty. CAM, that is going to be the next paragraph. If it is mandatory for listed companies, include this. If you have a key audit matters, it is going to be compulsory. Unlisted entities, if you are required by other law and regulation, then include CAM. Or if as an auditor you decide that I would like to communicate a key audit matter to the users of the financials, then you may. But as of today, it is not required for unlisted entities. Other information, then the audit report has to cover the other information as required under SA 720. What are these? It should include other information in case of auditor has obtained or expects to obtain the other information as per the Companies Act, for example, in the listed entity as per the listed requirement. And in case of an unlisted entity, it has obtained all of the other information as defined in the audit report as of the date of audit report. Responsibilities of management. You have to include a section very clearly to very clearly lay out what are the responsibilities of the management in the financial statement. Management may have to be replaced by an appropriate term where required as per the legal framework. So if there is no management, then replace it, for example, by a board of trustees or other form of management which is in charge of governance. So that word can be changed. And what do you have to state in that paragraph? That preparing FS in accordance with the applicable framework, such as for such internal control as management determines is necessary to enable this preparation, whether due to fraud or error. That affirmative statement, you have to say that this is management's responsibility. And assessing the entity's ability to continue as going concern and whether the use of going concern is appropriate. That has to be disclosed. Auditor's responsibility for the audit of FS, very important. You have to disclose this. You have to give what is the responsibility of the auditor in the audit of the financial statements. In this section, the auditor will have to state the following items. What is the objectives? The objective is to obtain reasonable assurance, not absolute, whether FS are free from material misstatement and that the audit report includes his opinion. Reasonable assurance is high level. It is never a guarantee. You never say that audited hai, that means every single penny is vouched for. No. Misstatements, the fact that misstatements can arise because if there is a fraud, there is a concealment by the management, by those charged with governance, by employees, there's a collusion to that extent, then they may not have been detected. So that fact has to be disclosed. When you are exercising professional judgment, you have to maintain professional skepticism throughout the audit. You have to give an affirmative confirmation to those charged with governance that you have complied with the requirement regarding independence and the ethical requirements under this code of ethics, and in which 701 is applicable, the fact that the CAM has been disclosed. You also have to describe key audit aspects, and again, I will leave this presentation with you since I have to cover other standards. I will request the branches to share the entire deck with you. Other reporting responsibilities under SA 700, applicable law or regulation may prescribe the following. What is required under 143(3) of the Companies Act, that is with regards to the IFC, that will have to be given. CARO, which has now been revised, and revised CARO is being done. I'm sure all the 3 branches will have a lot of programs on the revised CARO. That revised CARO will have to be reported under the applicable law regulation segment and referred to. Generally, we see Annexure 1 as the Caro report and Annexure 2 as the IFC report. If it is a company, then the requirements under 33 of the Banking Regulation Act are separately disclosed. These reporting responsibilities are covered in the paragraph report on other and regulatory requirements. Correct? This is a very important part of the report. Finally, signature. The audit report should be signed in your personal name. It cannot be signed as a firm. Many people ask a question whether I can sign ANIKET and company. No, the audit report has to be signed in your personal name. If the firm is appointed, AR is signed in personal name in the name of the audit firm. So you can sign firm name and yourself, but your personal name has to be signed compulsorily. And your membership number and firm registration number has to be mentioned. The firm registration requirement, we are all aware, came some 7-8 years ago because of a certain incident that happened where in one of the firms, they had multiple firms registered in various different regions and cities of the country. For example, ANIKET and Company, Ahmedabad firm, ANIKET and Company, Mumbai firm, ANIKET and Company, Kozhikode firm. And eventually what happened was the engagement was received by ANIKET and Company, Kozhikode, and ANIKET TALATI was never a partner of the firm, yet he had signed this report. So now it is very clear, your firm name and your firm registration number, membership number has to be always mentioned. The firm registration number, a lot of people have this confusion. It is the requirement to be mentioned in the report. No need to mention if you are, don't mention it other places, but your report ought to have your FRN. The place of the signature where you have signed, client is in Kozhikode, and let's say you are signing in Trichur, then client will sign Kozhikode, you will sign Trichur, and specify that location where the audit report has been signed. Date the audit report. And what is the dating requirement under the standard? The date has to be not earlier than the date on which the auditor has obtained sufficient and appropriate audit evidence on which to base his auditor's opinion that all the statements that comprise FS, balance sheet, P&L, cash flow, and the notes have been prepared. So that was ready on that date, and those recognized with the authority have asserted that they have taken responsibility. So in case of a listed company, audit committee and then the board has adopted this. In case of other entities, the management, those charged with governance, have adopted this. Only once they have adopted, the date of the audit report has to be on that date or a date subsequent to that. It cannot be before obtaining sufficient and appropriate audit evidence. It cannot be before these financial statements, that is balance sheet, P&L, cash flow, notes, etc. have been prepared. And it cannot be before the date it has been accepted by the board. That is why you will see whenever you are signing the report, we always ensure management signs first. Let them sign, and only then as an auditor I will sign. To all the young members who are attending this program, never in your life, even if a gun is put to your head, sign before the management has signed. That is a very big mistake some of us are making accidentally. The signature and the dating of the audit report should only be after the management has taken responsibility of it. So with this, I conclude this session on SA 700. We will now move on to the other two standards that have been given to me and allotted to me, and we can have a question answer session after that. Chairman sir, is it okay if we take a 1 minute break? I'll just
Yes.
yeah, thank you. Yeah, thank you. Wonderful to see such a wonderful participation on a Saturday morning, in that too on auditing standards. I must compliment once again all the participants. If you have any questions, I'm seeing some of you are putting it up on the Q&A. Some of you are mentioning on the chat. We'll surely try and cover all of these questions once we complete the presentations. So yes, the standard on CAM, I will not be taking this in that much detail because it is only applicable for listed entities. It may not be that prevalent in the areas of practice that majority of the members who are participating. So we'll just take an overview. CAM means key audit matters. Other definitions and acronyms remain the same. These are applicable for audit of complete sets of general purpose financial statements. So general purpose as well as complete set of financials, that is consolidated financials also. It is mandatorily applicable for listed entities. So in listed entities, if there is a key audit matter, will now have to be very compulsorily given. What are CAM? A CAM means those matters that in the auditor's professional judgment were of most significance in the audit of the current period. And CAM are selected from the matters communicated with those charged with governance. Let's spend 2 minutes to understand this concept. In the case of listed entities, this has been made compulsory. What used to happen earlier was there were certain assumptions that the company made. For example, it's a mining company and there is a depletion calculation. And they have given you a professional judgment and a professional opinion. You have relied on an expert. You have relied on the expert, but you still feel that this is a matter which is very significant because certain changes in the technical output, in the potential, etc., that can result into changes in the financial. So you are not saying that I require to qualify the report, to modify the report, to give an emphasis of matter. But still there is a significant matter that is to be dealt with. Earlier, they were always communicated with those charged with governance as required under standards. CAM is now introduced, in fact, to facilitate and benefit auditors. This is something which is where both the parties can come and agree and on that, yes, I don't think it tantamounts to a qualification or EOM. Management also feels, yes, this is an important aspect. So both will agree and you can then put it in your CAM as a key audit matter. So you have sufficiently disclosed it. Yet, let me tell with you, what should be qualified should come in a qualification paragraph also. Only you cannot simply move qualifications or EOMs to CAM and say you have absolved yourself of the responsibility. But yes, definitely this is going to hugely help and aid the auditors. It is in your benefit that if there are any key audit matters, they are communicated. How do you determine whether something qualifies under a CAM? Look at what is being communicated to those charged with governance. This may be formal in larger firms, but let's say for the firms that we are all in, small and medium enterprises. When we do the audit, your article or your staff will pick up something important, which may have a material impact that requires your attention as the signing auditor, which is significant matter. You discuss it with the management. It may not be in writing. You may have orally discussed it. But if you feel it is a significant matter and it requires your attention, then, and you have communicated it to the management, so it must fulfill both criteria. It warrants your attention. It is significant and you have communicated with management. Then it becomes a CAM. What are these matters which require significant auditor attention? What are the factors? Areas of higher RMM assessed or significant risk identified as per SS7315. Effect of significant events or certain transactions on the audit. There are certain transactions which you feel they have a material effect. They are significant. The treatment may be as per the standards, but it is material that will have to come. If significant auditor judgments relating to areas involved require a management judgment, what will happen in the future? Some technical aspects which only the management can provide you for. Those all are CAM. And in those aspects, you can qualify them as CAM. What are matters most significant? The nature and extent of communication in the TCWG, that is those charged with governance. You have to ensure that the nature and materiality of corrected, accumulated, and uncorrected, these are all important factors that you have to consider. The user's understanding of FS should improve if you are giving this. And You have to also ensure the severity of any control deficiency identified with the relevant matter. These all have to be considered whether a particular transaction, event, policy, or a management assumption, in your view, qualifies to be treated as a CAM and then separately disclosed in the financial statements. How do you communicate a CAM? Use appropriate subheading CAM and describe each key audit matter with reference to the related disclosure in FS. Please understand, it is something that you are not disputing. If the management has not disclosed it, then you have to qualify it or give it in the other matter or in the emphasis of matter paragraph. If it is not sufficiently disclosed in the financial statement, those matters don't qualify for CAM. So don't think tomorrow there is something that the management is hiding. You cover it in your CAM, therefore you feel it is disclosed. I'm okay. No. CAM matters are those which are already disclosed in FS. So you have to reference it to that disclosure. And you also have to state why it is considered to be most significant. So reasoning, simply saying revenue recognition, it is a matter of grave importance and therefore regarded as CAM in your CAM. One has seen such notes. No, you cannot say revenue recognition or 115 or Ind AS 18 or for that matter AS 9 and simply say CAM. You have to say why in that revenue recognition, what is that aspect that you feel is a key audit matter and how did you address it in your audit? Let's say there are huge debtors. You have seen subsequent liquidation. You have obtained significant and appropriate audit evidence. You have comfort that yes, the auditors are okay. Yet if there was, let's say, certain higher number which you feel this is a huge matter, there are certain issues with the debtors that may arise, then in the CAM paragraph you will state what are these matters, because there are specific cases. I'm not giving you what that can be. Based on the facts, please give those matters to be considered. And how did you address in the audit? So let's say you sent out confirmations, the external confirmations is required in the standards auditing. Mention the fact and then only the CAM can be covered. So the order of a presentation of individual CAM is a professional judgment. Which one comes first? Which one comes second? It is based on your professional judgment. It is based on the relative importance of each CAM, based on your judgment corresponding to the manner in which such matters are disclosed. Some people ask, how many CAMs can I give? If you look at simply, let me share with you the annual report, for example, of Reliance Industries, if I have that open available with me. And again, I'm only showing this as a matter of understanding. You can see the annual report and the independent auditor's report of Reliance Industries is in front of you. These are the CAMs, capitalization of property, plant and equipment. They have mentioned why it is a CAM and how the audit addressed this CAM issue. Moving forward, look at the number of CAMs. Estimation of oil reserves. I mentioned this is a very technical aspect. You will need geologists and others who will determine this. And based on that geologist expert's opinion, your depletion, other things get calculated. If there are litigation matters, contingent liability is disclosed. Wherever provision is required, provision is made. Yet these matters are given as a CAM. What have you done? You may have gone and taken auditor's opinion. All of that you can read here. They have assessed management's positions to discussion with in-house legal expert. So you mention your audit procedures, how you obtained comfort on that, why it is not being qualified, yet you are putting it as a CAM. IT system controls over financial reporting. Fair value in Ind AS, because it involves how you are, for a particular transaction, fair valuing the value of shares. That can be a CAM. Impact due to significant volatility in crude prices. Now, this is a very specific to this industry, but other industries may also face it, which use oil, gas, rubber, etc., where there is huge volatility. Investment in certain companies, transfer of identified liabilities from another entity to here. So these are all examples of CAM. These are all examples of how a CAM can be used. The reason I shared it to it is because there are no restriction on number of CAMs, as you can see in the slide. As many as required can be given by the auditor Please describe the adequacy of description, reference it with the related disclosures. So wherever that amount is coming, let's say the legal expenses, if we looked at the contingent liability and the legal expenses, contingent liability note will have to be cross-referenced. Why have you considered it to be most significant, and how have you addressed it in your audit? Two situations where CAM should not be communicated. So yes, it is material, it is important based on a professional judgment. You have communicated with CAM, but yet it will not come in the annual report if the law or regulation precludes public disclosure. Confidentiality, say certain laws which say you cannot disclose this. Then you only communicated with TCWG, don't bring it out as a CAM. And in extremely rare circumstances, the auditor may determine that the matter should not be communicated because adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits. So here again, room has been given. There can be certain unforeseen circumstances, certain very confidential kind of defense, for example, entities which our auditors may be doing. And there, the auditor may determine that no, it is not in public interest to give this CAM. In those situations, CAM should not be given. Here, there are such situations, 3 situations where CAM section is required, but no CAM will be communicated. What are they? You determine as an auditor that there is no CAM. Second, auditor determines that CAM should not be communicated due to restrictions in para 14, that is law requires you not to do it. Or the only CAM determined is a matter giving rise to a modified opinion. It was a key audit matter, but looking at the significance, the management has not disclosed it. You have modified your opinion. You have given a qualified opinion, an adverse opinion, or a disclaimer. Then there is no requirement of CAM. What is the difference between a CAM or a modified opinion? Between CAM and emphasis of matter paragraph, and CAM versus going concern have all been given in this presentation. Due to the paucity of time, I'm quickly trying to take you through the other presentations. You will have to follow the documentation required as given under this standard. So very important, CAM only and only applicable in case of listed entities. For others, if in your judgment you wish to give it, you may, but as of now not required. What is already modified as per SA 705, qualification, adverse opinion, disclaimer of matter, then CAM doesn't qualify. CAM is something which in your professional judgment is of a material amount. It requires your attention. You have communicated it to those charged with governance. If all these conditions are satisfied, then you will propose it as a CAM. You will also include what have you done as an auditor in these scenarios as an audit procedures that you have performed. And like I mentioned, no restriction on number of CAMs. But if the CAM, in your opinion or by law, is prohibited due to confidentiality or other reasons, then in such cases, you are not required to present it. So that is 701. Finally, I will touch upon SA 705 and 706 very quickly, and then we can have all the question answer sessions. I hope my presentation on 705 is now visible on the screen.
Yes, sir. Yes, sir. It's fine.
So 705, what does it deal with? It deals with the auditor's responsibility to issue an appropriate report in circumstances when forming an opinion in accordance with SA 700. The auditor concludes that you cannot give a clean or an unmodified opinion. Then from 700, you jump to 705. 701 CAM is only for listed entities, key audit matters. So it is a component of the report. You understand the structure of numbering 700 and 701 because 701 is not a modification. It's an addition to the report. Therefore, has been numbered as 701. Modifications are in 705 and 706. What are the types of modified opinion? And I think we will restrict ourselves to this slide because of the time constraint, but very clearly, in this slide, all the types of 705 reports have been covered, and we have had some discussion on them in our presentation going before this. You can issue a qualified opinion. So there is a basis of qualification paragraph. What can be the example? The company has not followed, let's say, a particular accounting standard. Typical example, in case of a partnership firm, proprietorship firm that you may be auditing. The company, let's say, follows the block of asset method and depreciation as per Income Tax Act, Section 32, and the rates of depreciation as per the Income Tax Act. Then it is not complying with AS 10, for example, because AS 10 requires gross block, accumulated depreciation, net block. In income tax, there is no concept of accumulated depreciation. You have your net block and then you depreciate every year. Clearly, if the balance sheet is prepared by the management only for income tax purposes, in those cases, it will automatically result in a qualification of AS 10. I'm giving you a basic example which may be applicable in the day-to-day life. So for all these partnerships, proprietors or other entities, even an LLP, if let's say it is preparing only as per income tax basis, depreciation, and not following the cross block, net block, and ACDEP requirement under AS 10, you will have to qualify it. Adverse opinion means what? It's a stage above disqualified. And finally, disclaimer of opinion. That means you do not obtain sufficient and appropriate audit evidence to arrive at an opinion. Qualified opinion is an opinion. You say the profit is okay, subject to 1, 2, 3. This adjustment, if this was done, profit would have been lower by this much, reserve would have been higher by this much, this would have been the impact. Those are qualification. Whereas in adverse, it is also an opinion, but it is saying that the profit and losses is adverse. Therefore, you are not quantifying it, you are saying it's an adverse opinion. It's the worst form of opinion in terms of the quantification. But disclaimer, multiple reasons. Your auditor, there has been a raid, all books have been seized, you do not get documents, vouchers are not available. You are not able to arrive at an opinion because you do not have the significant and sufficient audit appropriate evidence. In those cases, you give disclaimer. So what results, what are the affecting factors? Nature of matter giving rise to modification. You have to look at what is the nature. Is it simply a non-compliance of the standard? Is it simply in some cases some documents were not available, or in all cases documents were not available? And auditor's judgment with respect to pervasiveness, that is the spread of effects or possible effects of matter on effects. Some may be understood by you, some may not be. If the effects are, you are able to judge the pervasiveness, based on that you will decide whether you give a qualified, adverse, or a disclaimer of opinion. Whether the financial statements are materially misstated and there is inability to obtain sufficient and appropriate audit evidence. So therefore, this one slide will give you where and what should be followed if financial statements are materially misstated. One particular accounting standard is not followed. Certain amount transactions, you are not clear whether the treatment has been done correctly or disclosure has been done appropriately. You feel this note had to be given. Then look whether the amount is material. If it is immaterial, we will go to SS 700. If it is material but not pervasive, pervasive means it is not so pervasive that it will have a huge impact on the entire functioning of the company, then you can give a qualified opinion. But if it is material and pervasive, spreads across the company, like how you are seeing, just to loosely give an example, the mucormycosis starts one, spreads across the entire face and body, and the human goes into the brain and impacts the life of the person. Similarly, if it is one accounting standard disclosure or its recognition, you can give a qualified. But if there are multiple and the impact will be so pervasive that it impacts the entire company, then you have to give an adverse opinion. So for material misstatements, that is non-compliance of standards, non-disclosures, etc., non-compliance with Schedule 3, non-compliance with other aspects, these all, if they are material, not pervasive, qualified, but if it is pervasive, adverse. Inability to obtain sufficient audit evidence. So you are not able to, on one of the elements of the financial statements, arrive at the opinion whether it should be treated this way or that way. If it is for a material amount, but not so pervasive, which will have the impact on the company, you can give a qualified opinion. But you did not get expense vouchers, you did not get asset vouchers, you did not get income vouchers, then in such cases, the inability to obtain sufficient and appropriate audit evidence is in fact not only material but pervasive, because it is impacting all lines of your financial statements, all items and components of financial statement. Then you will have to give a disclaimer of opinion. So this is a very important chart that I wanted to come with you and discuss with regards to the modification in audit report. We have discussed about other components of the audit report. Finally, I will only like to very quickly discuss the SA 706 with you, and then the SA 720, I'm sorry, with all of you, and then which deals with other information, and then we can have all the question answers. So 700 we discussed in detail. Why I spend more time on that? 95% of the cases or the audit reports that we give in our general day have an unqualified clean opinion, clean report. Therefore, we spend the maximum amount of time. 701, which we discussed next, largely only applicable for listed entities. 705, there will be cases specifically in non-corporate entities. Like I mentioned, they may not be complying with AS 10, the requirement of gross block, net block, etc., and accumulated depreciation. AS 15, employee benefits, they may not get an actual valuation done. In those cases, we are generally issuing a qualified opinion. Very rare cases that you will issue adverse opinion may happen. And now, when specifically so many companies are in IBC and in the NCLT, and you may not get all that evidence, digital data is destroyed, invoices are not available, other vouchers are not present, then disclaimer of opinion as per 705. Finally, very quickly with regards to the SA 720, the SA 720, now it has been linked with the concept of annual report. There are enhancing and strengthening the auditor's work because it provides new requirements and it provides transparency on auditor's work. What does this standard largely deal with? It deals with, it is largely based on ISA 720, that is the International Standard Auditing issued by the IAASB. It contains new requirements to enhance the strengthening of auditors' work on other information. So if there is other information which is covered in the financial statement, and what is the auditor's responsibility towards that and how he should report towards it, that is covered in the 720. It requires a separate section of other information in the auditor's report. And there are 7 illustrative formats of audit report which are given here, which make confirming amendments to the standards in auditing. So there is a separate requirement to give other information paragraph and make this. What are the new requirements then? Determine which documents comprise the annual report and entities' planned manner and timing of issuance. And when other information is not available till the date of annual report, so you are issuing your audit opinion, you have P&L, balance sheet, cash flow ready, but director's report, other reports which are part of the annual report, if they are not available, then in those cases, you have to request the management to provide those, and that the final other information will be provided when available to its issue. So auditors can complete their procedure as per standards on auditing. This is largely which deals with the SA 720. Like I said, because I also have another meeting lined up, I would like to now conclude the session that we have been assigned to me. We've discussed about SA 700, the entire reporting requirement for clean, unmodified opinions. 701 with respect to CAM. We discussed in the clean reports the entire contents, components, what are the common errors that people are making, why we should stop the copy pasting and develop the art, like I said again with folded hands, of always refer, go to the institute website. There are 5 illustrations in the SA 700. go to that applicable illustration for your entity, select that illustration, and always make your audit report based on that illustrative format. Because when we copy paste, we miss and make mistakes on the company name, we make mistakes on the year. We are using the same format throughout the year. Some entity was incorporated during the year. Still we say for the year ended this. There is no year, there is a period. There is a loss, yet we refer to profit when we are making our opinion, because again, we have copy pasted. So 700 we have discussed in detail. 701, situations in which CAM arises and when CAM must be given. What are the components of CAM that we have discussed? We have discussed 705, modifications in audit report in the form of a qualified opinion, adverse opinion, and a disclaimer of opinion. And in what cases, if there is a material misstatement or you do not have audit evidence sufficient and appropriate, if it is pervasive and material, or material and not pervasive, which block it will fall into. We have discussed that. And finally, the other information part of the auditing standards. With this, I once again thank all of you for a very lively participation all throughout. I've been noticing there are almost 130 participants who have attended. There are a lot of questions which I can now take. I would now hand it over back to the organizers, and thank you once again for inviting me.
Sir, thank you, sir, for this excellence. There are some questions which has come up. So, Surya, if you can take up the questions from the chat box.
Yeah, I'll take it. So the first question is, like, the webinar held on day before yesterday, the faculty was advising that the audit report shall be addressed to the registrar of societies. But today you have advised that the report shall be addressed to the members of the society. Please advise which one is correct.
No, so in my view, this is a very standard answer. The addressee has to be the management, which is going to be those charged with governance. The registrar will always have a copy of the report available. Now, for example, in the case of C&AG, the appointment is done by C&AG, but yet you are reporting to the members of the company or the corporation to which you are reporting. Similarly, in societies, I don't know what is a typical case in Kerala, but here also the registrar of societies or the cooperatives is not the one. We are always issuing these title to the members of the society. So in my view, this will have to be titled to the members.
Okay, sir. I hope it is clarified. The next question is, if a company adopts policy as per IFRS, if similar aspects are not covered by Ind AS AS, management is following as per para 12 of Ind AS 8. In this scenario, any additional wordings are required to be given in the FS by management and in the audit report by auditors. Example, a definition of business or asset practical expedient para B17 of IFRS 3, which is not there in Ind AS 103, by virtue of which investment is accounted as assets in the consolidated FS in India.
So, like I said, it will depend on the reporting framework to which you are reporting. If the reporting framework is the general purpose reporting and you are specifically also required to give a general purpose reporting framework for Ind AS, and you may have prepared IFRS, for example, for its internal special purpose requirements. In my view, the ideal situation would be to prepare separate sets of financials, have an Ind AS set of financials which you prepare, and then give a separate opinion. Therefore, you will be not covered by this situation.
Okay. The next question is, if ABC Associates is appointed as auditor of a holding company and subsidiary is audited by XYZ Associates, the consolidated FS subsidiary revenue, asset and liability amounts to greater than 95% of total consolidated FS. In this case, can ABC Associates rely on the work done by the other auditor, given the facts in other paragraph and issue in an audit report, or is it required to carry out audit of subsidiary in detail? So
we looked at the SS 600, the other matter paragraph when we were dealing with SS 700. SS 600 typically deals with this situation also. Currently, the standard that is there in India is very clear that if you have relied on the work of the other auditor and the subsidiary, for example, in this case has been audited by XYZ Associates, you will have to give it and disclose it in the audit report under the other matter paragraph. quantify the revenue, the expense, the asset liability that has been consolidating and state that fact. But whatever is permitted as per SA 600, that is, if you look at SA 600, there is certain provisions with required with respect to planning. So during planning stage, you can look at the group auditors, you can communicate with them, you can get all the comfort that you want. But I would not say that the end phase, you will go and carry another supplementary audit. In that case, you will have to only issue the other matter paragraph.
Okay, so thanks. In the case of a privately limited company running a resort, as you said now, they are incurring losses and capital is negative. The company has entered into a lease agreement and they are getting monthly lease amount, which is also not sufficient. It is also uncertain whether the company will earn profit, and the management is also planning to sell the resort. In that case, whether the going concern is affected.
No, I would say in such a case, multiple things are affected. Once you are looking at selling the resort, so that is asset held for sale, and I would look at a reclassification of how you are valuing the assets. You would have to reclassify them as an asset held for sale. Point number one. Point number two, if the management continues to report for it on a going concern basis, I would see as a challenge based on the facts that you have shared here, that the revenue from leasing is not sufficient to carry out your local expenditure also. Now these are COVID times. Okay, let's try and understand. So it may be possible that sitting today we all say no, the company will not be able to perform. But I don't know if many of you read this. Yesterday or day before, there was a statement by India's ace investor, Mr. Rakesh Jhunjhunwala, who said that November, December come, Diwali and Christmas, it is going to be a time that you will not find a single room in a single hotel in India. That is how much travel demand is going to be. Now, this is again an assumption. I don't know he is right, who's right, because in our CA course, we don't teach astronomy, astrology, so we don't know what will happen in the future. So you have to take a professional judgment of the facts. What I would say, looking at this, if the management look at and decide with the management what their plans are. If they have plans that let's wait it out, we will work till November, December, things will improve, no third wave, and the resort gets working full and fine, then it can continue as going concern subject to sufficient disclosure and amendment, modification in the audit report. But in no circumstance can you give a clean report. You will either have to add a going concern paragraph, give a qualification if management is not agreeing. Either of this will have to happen, cannot be a clean report.
So next question. Can a subsequent event which provides evidence of conditions that arose after the date of financial report be communicated as a key audit matter or an emphasis of matter in the audit report?
No, so if it is after the balance sheet date, but it has a material impact of the statement on balance sheet date, definitely I would say yes, this ought to have been covered.
A company has remitted 5 crore as per settlement commission order, whether auditor has to report.
So if the management has sufficiently disclosed it and the material is the amount is not that material, I would say a sufficient disclosure in the financial statements, it's okay. If you feel, you can still cross-reference it in your audit report in any of the paragraphs that you feel appropriate, maybe as an emphasis of matter at best. But I don't foresee, if management is disclosed, payment is made in terms of a settlement order, it is still a judicial order, and to that extent would not tantamount to a qualification in my humble personal opinion. It's enough if you simply disclose it in the financials and cross-reference in your own report.
Okay, sir. I also welcome CA Babu sir, the Central Council member. Welcome, sir.
Sir, very good afternoon, Babu sir.
Yes, sir, you are in mute, sir.
ANIKET, good afternoon. I thought since you are there, I will also join for the meeting.
So nice, sir. Thank you so much, friends. It's an honor to have Babu sir. Sir, at the start, I mentioned you that I have the privilege of coming multiple times to Kerala and enjoying the hospitality of Babu sir. And more importantly, I had the privilege of accompanying sir in the Middle East, and the goodwill that sir enjoys, not just amongst chartered accountants, but even all the government officers, embassies, the corporations in UAE is phenomenal. So sir, truly honor for me to be in Kerala. Thank you for inviting me, sir.
Thank you. Thank you. Nice to hear you here.
Thank you, sir. I hope it was nice for the participants also, because it's a very dry subject of audit standards, sir.
Yeah, I know, I know. Generally, people don't bother for the auditing standards.
Sir, there are few more questions. So can we have the
Yeah,
felicitation just
I'll
of-
very quickly answer them. There is one with regards to the public company incurring recurring losses.
Yeah.
Like I said, we discussed during SS 700 and more specifically 570. See, you have to look at if these recurring losses have resulted in the net worth being negative or eroded, whether the operating cash flow is continuing to look negative, and what is the future projections of the management. Based on the discussion with the management, if you are not able to convince and are not arrive at a professional judgment that and have sufficient and appropriate audit evidence that this entity can continue on a going concern, there are challenges to it, then yes, it would require a kind of a modification in your audit report. Like I said, when we discuss the 570, it may be through say 700 by including a paragraph, or it may require a qualification in your audit report as per 705.
Okay, sir. So there was one more thing. How did we report director not attending the board meeting for more than 12 months, but continuing the board?
So this would again be in the other regulatory requirements, because this is covered under that. That is why, if you look at the SS 700, it has largely been drawn out of the ISS 700 issued by IAASB. All the paragraphs are very simple, or rather the same as you would see in India for an audit report in the US, UK, or any other jurisdiction. But the other regulatory requirement paragraph has specifically included here for the matter that you are able to report on these non-compliances. So in this case, if 167(1)(b) is attracted, you can report it in that paragraph.
Okay, sir.
800 we have not covered today, so I would like to skip that. Anything else that that we are missing from the chat box?
Chat box is one thing. Will the other matter paragraph apply to the non-corporate entities?
Yes, in fact, other matters will apply to all. So it doesn't. It is for the auditor and not the auditee. Okay. The 701 CAM is the only one which is applicable for listed entities. These are all general. 700, 705 are all general and apply to the auditor based on the circumstances of the audit.
Okay, so the questions and answers and chat boxes are fully covered. I request Babu sir for the felicitation.
Good afternoon to all of you, my good friend in the council. And more than that, I think ANIKET TALATI is the youngest member in the Apex Council of the Institute, and he represents the third generation. His father, as all of you know, was a past president of the Institute of Chartered Accountants of India. His grandfather was a member in the Central Council of the Institute. Therefore, I'm sure he comes with a rich legacy and experience, and naturally he is one of the true jewel in the Apex Council. I'm very glad today he has addressed on one of the very important topic on standards on auditing, because he himself is a core auditor. That's a advantage. Therefore, and also he's headed the financial reporting review board, which is a very rare privilege, and which scrutinizes largely the published financial statements of listed entities. And whenever we come across with many a time when subsidiaries are unlisted and relatively more small entities as compared to the holding company, we have come across with several non-compliances. Therefore, I'm sure I think ANIKET would have touched upon the publications which comes out, FRRB comes out with commonly found non-compliances. Therefore, I think it should form part of a library of every auditor if you are providing assurance service. And I would earnestly request all of you to go through that. And I should congratulate the trio the Calicut, Trichur, and Palghat branches together jointly organizing this seminar on one of the most important topic, standards and auditing. And I should thank chairman of Calicut branch, my good friend Arun Subramaniam, who has been particularly insistent that I should join for this valedictory, and chairman of the Trichy branch, Aryan, Manoj Menon, and other managing committee members, and I see a host of participants, more than 110 participants. There it is a good thing, even on the last day and the last phase. Therefore, and day before yesterday, we had a day-long disciplinary committee meeting. And many a time we come across with, auditors are not able to defend how they have been in compliance with the standards and auditing. I think in any issues of non-compliance, if you are able to defend yourself with standard compliance with the standards and auditing, I think you are. I can assure you that you are sufficiently insulated from all disciplinary proceedings. Any time we come across with one of the cases which came across was on non-compliance with SA 505 on external confirmations. There no external confirmations are obtained. When we ask them what is the alternate audit procedures you are conducted in the absence of external confirmation, many a time they are not able to justify or depict what are the audit procedures which have been carried out. Therefore, these are all, I'm sure during the course of last 3 days, you would have definitely discussed on all the standards, SQCs, SAs, SRAs, and SAEs, and SRS. And see, when we go for the bank audit, that's one occasion which you come across with the balance sheets certified by your colleagues. And many a time, even today, we find prepared from the books of account certification, extracted from the trial balance, and putting the sign and seal of the chartered accountants who are and giving an impression that it is audited. But I think it is largely because of the lack of awareness of SRS 4410 on compilation engagements, where you are required to issue an accountant's report, not an auditor's report, and specifically stating that you are not audited the financial statements, which is underlying. Therefore, I think what we come across, especially my experience in the DC, is lack of awareness on compliance and importance of the standards on auditing. So I think that as compared to essays, there is more awareness on accounting standards. And before even it became mandatory under 143(9) of the Companies Act 2013, essays were mandatory, even otherwise for all assurance engagements. Therefore, it is not that today under the Companies Act it has been made mandatory, but Institute has made mandatory for because see, whether you do the audit or I do the audit, our opinion on the financial statement should be more or less same, and that can be achieved only through standards on auditing. All standards ensure that there is the practices which is being followed is standardized. Therefore, it is very important whether a large firm does or whether a proprietor does the audit. See, our finding and opinion on the financial statement should be more or less same, and that I think can be achieved only through compliance with the standards on auditing. And I congratulate. I don't want to stand between you and. I'm sure you had a good feast of knowledge through ANIKET, TALATI, and I think MPV sir was there on the first day, I think, and also Jomon Ke Josh. See, all of them I would have shared very good, and I congratulate the branches for this good initiative. Probably you should continue with this through workshops, because I think in 3 days to cover all the standards and auditing will not be quite possible. Therefore, I think start going with workshop discussing the standards and auditing, at least important ones which is commonly applicable. That is my suggestion, that awareness building is very, very important, and that is required for and today the economy is opening up. The field of auditing is also getting opened up. Therefore, there is sky is a limit as far as chartered accountants is concerned, as far as professional opportunities are concerned. This year, I am heading the Professional Development Committee of the Institute, and we are planning to come out with a revised publication on professional opportunities. And also, very soon, we are coming out with a week-long workshop for newly qualified chartered accountants who are started their practice, how to go about with the practice in each area. Therefore, each day we will be discussing, say, for example, one day how to prepare an appeal and how to present an appeal before the Commission of Income Tax or the appellate tribunals. Like that, for each area, we are planning to take up and give you a somewhat hands-on experience on these areas, which I'm sure will be beneficial. And we are already planning to make it free for those who are qualified in the last 5 years, and only registration fee will be there for other than those who are qualified in the last 5 years. Therefore, I also seek your suggestions, which we had last week. We had a webinar on cooperatives, taxation and audit of cooperative banks, which was very well received. More than 4,000 participants participated across the country, which was and definitely cooperative sector is one area where PTC will be focusing this year. And many areas audit by chartered accountants is not mandated even today, and we will try to take up that. I wish all the very best to all, and thank you once again, ANIKET ji, for joining us in this webinar. Thank you very much.
Thank you so much, Babu sir. Thank you, sir.
Thank you, Babu sir, for your words of wisdom. I request CA Arun, Calicut Chairman, to give closing remarks.
Thank you, Surya. We had a wonderful session here for the last 3 days, and today was especially really good on the standards regarding how to form an audit report and what are the key areas which we need to see as an audit report. ANIKET ji has clearly mentioned us how the copy-paste attitude of auditors has to change about, and the reporting mechanism where it has to be clearly mentioned. It is for a period which we are reporting as such, and that details has been clearly mentioned. So thank you, ANIKET ji, for giving us this enlightening session. Also, Babu sir, who joined us for this valedictory session, I have a special thank you, sir, for joining us through this valedictory session and giving us highlight on what are the major areas of trust we should give us when giving an audit report, so that disciplinary mechanism does not have an issue facing to us. So I also take this opportunity to thank all the other speakers of past days, such as Jomun sir and Bhavani sir, who has been giving a wonderful session for all the 3 days. So thank you, thank you all. So I hand over to Surya.
Thank you, Chairman. I request Sumesh to hand over the e-certificate to the faculty.
Sir, that will be sent later, because it has to
Okay.
from 3 branches, because we could not allow. Sorry, sir, that will be sending.
No problem, sir. No problem. It is my pleasure, and I hope all the participants had an interactive session. And thank you once again to Honorable Babu sir for the concluding remarks. And I think he summarized what I was trying to give across in terms of the disciplinary and other aspects very, very well based on his experience. Thank you, sir, and thank you to all the 3 chairmen, Vinod ji, Arun ji, and Aryan ji. Thank you.
I request CA
Sir,
Aryan.
it's on mute. Babu sir, it's on mute.
Babu sir on mute, sir.
Babu sir, it's on.
I was telling, Chairman he is giving, awarding the e-certificate. Lunch also will be served on the e-mode.
Will do.
Thank you, sir. Thank you so much.
I request CA Aryan Kikin, Chairman of Thrissur Branch, to give vote of thanks.
Thank you, Suryanarayan sir. Respected Speaker of the Day, Central Council Member C. ANIKET TALATI, our own Central Council Member C. A. Babu Kalliveli, Chairman of Kozhikode, Palakkad branch, Managing Committee members of all the 3 branches, members attending the seminar. Good afternoon to all. I'm honored by giving this responsibility of proposing vote of thanks. Audit report is the final and product of assignment of an audit. It must convey the entire information about the financial entity and its activities. For preparing a report in the complete sense, we have to follow all the essays. All the stakeholders and regulators are keeping an eye on you, and we are liable for any misstatements or non-compliance in audit report. Presentation of financials. CA ANIKET TALATI has explained the requirement of complying all the standards on auditing, especially most important essays for safeguarding yourself from the report you issued, with a caution of preparing the report as a new for every year, instead of a copy paste to avoid irrelevant points in the report. Very useful chart to ensure the compliance. Audit matters to included in the reports, types of opinions to be issued in different situations. Let me complete my official duty proposing vote of thanks. On behalf of the chairman, committee members, and members of all the 3 branches, first let me propose our sincere thanks to the Speaker of the Day, ANIKET TALATI, Central Council member, who spent his valuable time with us and explaining the essays with great care. Most importantly, transformed his expert knowledge on the essays to the viewer. Next, let me convey my our CCM from Kerala, Babu Abraham Kalliveli, continue the session with such words of caution all viewers about the essays, disciplinary proceedings initiated by the institute as well. Propose vote of thanks to the organizers of this joint webinar, Chairman of Kozhikode and Palakkad, committee members of all the 3 branches. The most important is the attendees or viewers of any webinar. We had a very good participation all the 3 days. Now, propose vote of thanks to the members who attended with their dedication and made this webinar become a success. Finally, to the staff of all the branches who were supporting us to conduct the webinar. Thanks to all.
Thank you, sir. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, Babu sir. Thank you.
Okay. Nash. Surya sir, Nash.
Yeah. Please, Sumesh, kindly please play the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you all. Thank you, members. Thank you,
all.
Chairman of all the Kozhikode and Palakkad and Thrissur branch for organizing